Broadcom ended Monday in the red while the chip party kept dancing. The stock swung from the mid-$350 to the mid-$330 during a single volatile session, a move that felt like a wardrobe malfunction on a catwalk rather than an earthquake. Chip ETFs finished the day higher. Broadcom didn't. That divergence matters. Why? Because at the start of 2026, investors are squinting at one question. Is the huge data center build-out for AI a durable secular boom, or a high multiples fairy tale that needs to be proven quarter after quarter? Friday's U.S. jobs report and Broadcom's next earnings day, early March on most calendars, are the immediate catalysts. Those two headlines could flip sentiment fast. If jobs print soft and Broadcom shows consistent order flow visibility, the tape can rip higher. If jobs are hot and Broadcom's margins or bookings disappoint, the tape can puke. What happened Monday in plain English? Here's the market microfilm. Broadcom opened near the $355 area, slid to the mid-$330s intraday, and closed the session lower, around the low to mid-$340s, depending on which quote you look at. Traders who bought at the high felt immediate stress. Those who bought the dip were pinpointed by the next wave of headlines. The intraday motion told you the market's short-term debate in one sentence. We love the AI theme, but we want proof it pays off at scale. Meanwhile, chip ETFs, the basket-bought love children of index and momentum investors, closed higher, meaning the group had positive flows and optimism. Broadcom's underperformance relative to its semiconductor cohort is notable because when the whole sector is rallying on AI narratives, a major component's supplier lagging the pack flashes a yellow caution light. Think of it like a parade where everyone's waving green flags and one float is rolling slower. People notice, tweet about it, and analysts rerun models while the band keeps playing. That's the mood on Monday. Why this matters? The big question on every fund manager's mind. Semiconductor valuations in late 2025 and early 2026 move higher on the back of the AI data center story. The logic is simple and intoxicating. Hyperscalers, cloud providers, and AI startups will spend huge sums on compute and network infrastructure, so the companies that supply components, chips, and interconnects will win for years. Broadcom sits squarely in that infrastructure stack. It makes custom ASICs for hyperscalers, it sells data center networking gear, and it owns VMware, which ties part of Broadcom's fortunes to enterprise software and cloud migration budgets. That's not a footnote. That's a strategic positioning that can both accelerate revenue growth and diversify the company's cash flow beyond pure hardware cycles. So when Broadcom lags, investors don't merely ask, did anything happen? They ask, is demand weaker or did management just not sell the dream well enough this quarter? Answering that determines whether Broadcom is a pullback buy or a company whose story needs a refresh. By the way, if you are getting some benefit from this content so far and want more like this, like the video, it means much to us, and hit the subscribe button and comment the word more. Just go ahead and type the word more, so I know. Now that you have commented, let's continue. The CES angle. Huawei on stage and the vocal AI narrative. CES, the world's biggest consumer tech stage, and Jensen Huang's keynote mattered for sentiment. When NVIDIA says next-gen platforms are in full production, investors recheck capacity, memory forecasts, and networking demand, the exact things that feed Broadcom's top line. Huang's CES momentum ripples out to the supply chain. If NVIDIA sells more, Broadcom's networking ASICs, interconnects, and adjacent systems get more orders. If NVIDIA's show is strong but the shipping approvals, especially into large markets like China, are delayed, the supply chain feels it. Reuters and other outlets covered Huang's CES speech and the ripple effects across the ecosystem. Put simply, CES is not just glam and demos. It's a big investor-facing product release that influences booking cycles across an entire subindustry. The macro risk, U.S. factory activity slumped, and that's a problem for tech multiples. Macro matters. The Institute for Supply Management's manufacturing PMI slid to a 14-month low at the end of 2025. That's right Manufacturing activity had been contracting, and December's reading underscored softer demand for industrial goods. For high-multiple tech stocks, that's an immediate worry. Slower manufacturing can presage softer capex and delayed server builds. Investors who bought on the AI narrative don't want the macro wave to wash the tide out of the server yard. Reuters and multiple outlets covered the ISM print and its market implications. Imagine you're running a huge cloud build, but the parts arrive later or customers pause bigger deployments because of broader industrial weakness. The AI story still exists, but the calendar slips. Markets discount that risk, and that's part of why a company like Broadcom, positioned at the intersection of chips and software, can see short-term moves that look dramatic. Broadcom, not just a chip company, a stack play, and a software bolt-on. Broadcom is a hybrid. It makes silicon networking chips, ASICs, and it owns enterprise software, VMware. That combo is part of what made Hock Tan's acquisition of VMware flagship news. Broadcom didn't want to be a narrow parts vendor. It wanted recurring subscription-like software cash flows that smooth revenue and juice margins. That strategy matters for long-term investors who prize recurring revenue over volatile hardware cycles. Reuters' coverage of Broadcom's VMware deal and Broadcom's own product pages make this clear. Broadcom is in the data center stack as hardware vendor and systems/software player. The result: Broadcom can monetize both rising data center hardware spend, more NICs, switches, ASICs, and enterprise transitions, customers paying for virtualization security and cloud services through VMware. That's why analysts view Broadcom as a play on both AI infrastructure and enterprise IT modernization. The price targets: how analysts see the upside and why scores vary. Analysts are a noisy, useful chorus. According to widely referenced price target aggregators, Broadcom's 12-month price target spread from roughly the low $300s up to about $510, with averages in the low to mid $400s depending on the service you ask. That range implies mid-20s to low 30s% upside from current levels at the time of writing. Different services compute the average differently. Some use 26 analysts, others 33, and targets change daily, but the headline: Wall Street sees room to the upside if execution and demand hold. Check the Yahoo Finance, Zacks, and TipRanks pages for the rolling consensus numbers. Why the spread? Because analysts weight risks and timing differently. Some model big, multi-quarter rollouts and keep lofty margins. Others anticipate more immediate margin compression from lower-margin custom AI processors or slower Chinese demand. So the average is a compromise between buy the dip big durable runway, and this needs clearer margin proof. Note this as well: fear God and give glory to him, for the hour of his judgment is come, and worship him that made heaven and earth and the sea and the fountains of waters. And there followed another angel, saying, Babylon is fallen, that great city, because she made all nations drink of the wine of the wrath of her fornication. Revelation 14 verses 7-8. I implore you to fear God and obey his law. For the time is near and judgment is near. Worship the true God, the creator of heaven and earth. Want more information about the book of Revelation? Please check the description section. That's the end for now. If you have watched until the end, drop a comment like this: I stayed until the end. Just comment that I stayed until the end. When I see this comment, I will give you a heart. 3 more favors I request from you. First, like this video, subscribe, and then turn on the notifications bell. If you do this, you greatly encourage us to continue bringing to you more information and insights. Do not miss out on our future videos. All I am asking is your subscription. Thank you for joining us today. Your support means so much to us. Do not hesitate to share this video to help someone who may benefit. I recommend that you watch the next video, subscribe to the channel, and share your thoughts about today's video. Wish you God's protection and care. With God, all things are possible. Luke 1 verse 37.